Hello and welcome to another episode of the Ideal Investor Show. Today we have a great guest. Jesse Stump is going to be with us, and I'm sure you have seen, if you are an investor or if you have heard about people who invest in real estate, especially to get passive income, that every so often there are issues with property management. We want to keep it all as passive as possible. We don't want to do the property management ourselves, and so we're dependent on others. And Jesse and his team have really developed this from the ground up. And in our conversation, we want to talk about how do we actually judge and find out what a good property manager is and how they actually work and what are some of the criteria. So I hope you're going to enjoy this conversation, and it will teach you a little bit about property management. So just in case you're not already a subscriber, please subscribe, hit the thumbs up button if you like the video so that we can tell the algorithm how to actually find our videos in the future. Hello and welcome to another episode of the Ideal Investor Show. Today we want to talk about a core issue that we always have as real estate investors, and that is how do we actually organize and find a really good property management and what are the aspects of that. And we have a real expert for that. We have Jesse Stump with us, and he is one of the core director level people at Seville Property Management in Maryland. So Jesse, welcome to the show.
Wow, thanks for having me. I'm excited.
Yeah, absolutely. We're excited to have you too. So I always like for our audience to get a little bit of an idea. Who is Jesse? What is civil property management? But also a little bit of like, what's the origin story, so to speak? You know, how did you actually get into it? What motivated you to pick that particular part of real estate? So can you tell us a little bit, how did Jesse become a director in a property management company?
Yeah, so it really started out back in 2013. We were living in a small single family home. We had just had our first kid. And just like most families, started looking for a bigger house on the other side of town and a better school district, and found this property that it was very quirky, had been on the market for about a year. And if you can envision it, it was basically someone had bolted on this 2006 apartment on top of like a 1950s home. And because it was so weird, it just kind of sat. And so one day I was looking at it and the gears kind of started turning about, the possibilities for renting this property out, renting out the apartment and moving into this bigger house in a better area and reducing our living expenses. So we took the plunge on that. We bought that place, still live in it today, and have rented out this apartment for, almost a decade now, and held on to our single family home as a rental.
Okay.
And so that was what opened our eyes to the power of real estate investing. And so, over the next decade, just began really ramping up the purchasing of properties. We've gone more from the residential side into doing some multi-unit. It's mostly multi-unit commercial now with some residential components. But as that portfolio, our individual portfolio, started to expand, just the need to systemize, we were self-managing everything, running around like crazy, as most people do when they're bootstrapping it. And so we started to really put together solid systems, electronic leasing, electronic payments, really making it more of a business versus a hobby. And so that was really the beginning of this idea of, okay, so we've now created essentially our property management company that's managing our portfolio. How can we start to use this to serve other people? Because we feel really good about the systems we've developed, and we saw the benefits in how our portfolio was managed through this process. And so we thought it was a great service that we could offer to other property owners in the area.
Yeah, that's great. And thanks for describing a little bit that journey that you went through. Now, one of the things that our audience members know us for, and how I actually got started building our portfolio, was that we were living in a relatively expensive area in California and realized that there would be very little opportunity to really build a portfolio just because the sheer amount of money for down payments was so substantial. So we are basically developed at first myself, and then now with Ideal Wealth Grower and with our community of clients, to where necessary be able to invest in locations where the performance of the properties is the way we want and generate cash flow even though we can't be there anywhere close. So it sounds a little bit that you were able, with your family, with your partners, to purchase this portfolio mainly close enough for you to manage. How important do you think that property management organizations, or at least some of their members, have gone through that kind of a process?
So, yeah, I think we're very different than a lot of property management companies, just based on, like you said, how we got started managing our own properties, our own portfolio. And now, as I've got a partner who helped me found the company, he's got his own properties and portfolio that are managed by it. I feel like it's a differentiator for us because we manage everyone else's properties with the same level of excellence we manage ours with. So that means when maintenance requests come in, it is a priority regardless of whose it is, because we have a process for how those are managed. Those same systems that ensure we get our rent payments on time, that leasing is painless, seamless. We're using those same platforms for others. I don't think that's how most property management companies were founded. I can't speak for all of them, but I do think that that's been a big benefit to us, and it's why we're able to serve our clients really well.
Yeah, absolutely. And I mean, I don't have any empirical data too about that. I've interviewed a few people who have either in the past worked in property management or have a property management company. What I'm finding is that it seems to be a little more traditional, that somebody worked as a job in a property management company or some kind of real estate company that also had property management, and then saw that, like you said, systems and approaches and dedication and stuff like that could, on the one hand, increase revenues and improve the satisfaction of the owners or of the people who actually want the management done for them, and then kind of like started their own thing, sometimes in the next town over or so forth. Now, one of the things that I would look for, and our community of investors would obviously look for, is what I would consider a quality component or quality aspect, right? One thing that I've heard many times, and everybody knows because I write there quite a bit, big fan of Bigger Pockets. And what I read there oftentimes is that property management is more or less the go-between. And I don't know, I mean, I saw on your website, it says, just give us your key and we do everything, keys and we do everything. But I want to dig a little deeper, because one of the things I've seen complaints about in the context of property management is that people say, okay, so now I have this company, a tenant calls them and says, okay, I don't know, the dishwasher doesn't work anymore, or the bathtub doesn't drain, or anything like that. But instead of them having some sort of a team of trusted handymen or trusted experts for a reasonable price to go after and do this, all they basically do is they just call some plumber or some kind of company in town, which then charges me $100 just to show up, do the work, probably has to go twice, because first they look what it is and then they go and get the stuff and fix it. So for something that is maybe worth 50, 60 bucks, if I were to do it myself, even if I pay myself 50 bucks an hour, I end up paying $200-$300, which kills cash flow, obviously. So that's a story that I've heard in different variations over and over. And when you say on your website, just hand us your keys and we take care of it, can you go a little bit deeper and tell us how you guys do it?
Yeah. So, I mean, first and foremost, we were investors first. I mean, the reason I was self-managing my properties is for the same reasons you are speaking of. I could do almost any of the work myself. A lot of the properties that we started out with, I was doing a lot of the renovations, very involved. I've got a construction management engineering background. So does my partner. And so we understand kind of the stigma about a big box store type property management company where it's almost a commodity, right? It's like, you've got someone who's marginally cares about what's going on and they're checking boxes. That's just not how we're built. We manage other people's properties the way we manage ours. I don't just get on the phone and just call whatever contractor I can find when there's an issue. 90% of issues, because we've been doing this for so long, can be handled by the tenant just through simple, hey, check this, check this, check this. We just, garbage disposal is not working, right? There's a simple reset button on the bottom that trips very frequently. I have them check that first. Try a wooden spoon. If it's not spinning, if you can turn it with a wooden spoon, more often than not, that solves 85% of problems with a garbage disposal. That's how we manage our properties. We don't just go hire contractors, because like you said, it almost becomes too big of a hurdle to try to scale when your cash flow is just getting undermined by every little thing. And so, yeah, we try to first empower the tenants to take care of issues in advance. We gather as much information as possible so that we can make an educated assessment of what's going on. And then we are capable, we have local folks that we work with all the time. If it is something that needs an on-site presence, and we're able to take care of that quickly. But yeah, I totally get the stigma associated with property management companies. And when you're operating at a scale where you've got 3,000, 5,000 units under management.
I'm kind of curious what you believe the size is, because I mean, obviously everybody who starts a business, runs a business, make the business profitable and grow and so forth. So I think that's totally normal. I mean, I do this with my company. I'm sure you guys do the same. But I'm kind of curious if you in your mind, or maybe you already do have a certain scale where you would say, okay, at that scale, it starts making sense, not just to have the skills yourself, which is beautiful to have, but then also to say, okay, certain quote unquote trades we bring in as kind of like employees because there's enough work to send them around, but then they're our people and we basically don't have to contribute profit to separate companies. That's always my thing. I wouldn't call it a stigma. It's just a matter of how do you organize it, right? If a plumber says anywhere I need to go, let's say in Baltimore, costs $50, $60, $80 to show up, supposedly for the car and the gas and whatever it takes.
Oh, yeah.
Right. And then I do my thing and it costs $99 an hour plus whatever pieces of equipment we need and stuff like that. I think everybody who listens to us, everybody who is interested in investing knows that those are the rates similar to like you getting your car repaired because the company wants to be profitable. It's not really what it costs to do the repair. But I also see the other side based on our own experience that if you only have, let's say, 100 doors, and I don't know if that's a number where it starts making sense, but you wouldn't have 40 hours of work, even for a handyman, constantly. Right. If the properties have been selected well and are not just falling apart right after purchase, right? So do you have like some number where you would say it makes sense to build an internal staff to take care of these things?
It's a great question. My partner and I, we just finished up a end of year strategy session, right. And it's something that we talk about all the time. And, you know, all companies, I think, evolve and perspectives change as opportunities arise and as, you know, just the market changes. But for us, where we have chosen to focus is on, well, how can we make this process more seamless so that it requires less bandwidth, less effort? How can we, like I said, focusing on empowering tenants to resolve issues that are well within their capabilities. Obviously, you don't want them tackling something that's an electrical issue or something, but the vast majority of problems that pop up are very simple to deal with. And so where we have worked on is trying to figure out how to streamline things. We're constantly looking to make things more painless for the tenant, more painless for the property owner, and more painless for us, ultimately. I mean, that's the end result. We want to provide excellent service. And so as we've continued to grow, our emphasis has been on streamlining processes. So I wouldn't say that our workload has scaled according to the number of doors that we've taken on, because every new property, and we manage a very diverse portfolio, everything from self-storage, commercial kitchens, standard residential. We manage a very wide array of property types. We just are able to learn and get better as we continue to evolve our property management portfolio in the same ways that what we did with our individual portfolios, right? You want to have the right parts and pieces and systems in place so that you're not running around crazy. We view our business, our property management portfolio in the same way, where every time we bring on a door, it's adding another 3-5 hours of work a week. We're not doing things right. We've got opportunities to improve there as far as the documentation we capture the first time we onboard a property. And there's so many different things that we do, but that's been our focus, is how do we streamline this process more so that we can be more scalable versus, let's just keep tacking on doors so that we can justify hiring someone and then,
I hear that. I mean, I have a little bit of a pet peeve and, I guess a little bit of self-reflection for our audience. I still feel in that very narrow space a little bit like a failure, because I've been trying to convince for years now property management companies that I work with for my portfolio, but I'm also always saying the same thing for anybody who buys a property, either through a referral from us or some place where they found a property where the numbers work. Most of them, if they're not brand new build, then they're renovated properties or they are in the midst of renovation. And the thing that I'm still dreaming about and I have failed to accomplish with any of the property management companies is that part of that renovation, for whatever item gets put in, that comes with the option of an extended warranty. To get that extended warranty as part of the renovation and make for that 123 Main Street a binder where all these extended warranties for the light fixtures, for the appliances, for the faucets. If you go into like a Lowe's or Home Depot, I'm sure, or even if you buy from other sources, almost everybody has the manufacturer's warranty, like a year or so, and then you can get extended warranties. I mean, on the new builds, it's easier because you can get basically an insurance policy for the whole place. But when you have a renovated properties, I've never understood why we're not just helping ourselves, both from an owner investor perspective as well as property management perspective, to say, okay, and I did this actually. I'm the crazy guy who went to Lowe's and said, I didn't do it, by the way. I pretended that I was renovating a property and went literally line by line through everything that would go in a property and asked them, how much would it cost if for everything that we listed now, I would get the extended warranty. And it was a little bit over $1,000, right? So between the, you add on all these 5 years, 7 years, 3 years, and so forth. And I've never understood why that is not something that is being picked up. But now that I have an expert like you, Jesse, is there an answer to why wouldn't somebody who renovates a property and then takes it into their management portfolio from day one get all these extended warranties to know, okay, the owner doesn't have to come out of pocket because everything is covered for anywhere between 3 and 5 years.
Yeah, it's an interesting thought. I mean, I certainly on our properties, when we renovate, one of the things we do, and when we bring on third-party properties, an inventory of every appliance, right? Make, model, serial number, effective warranty date. We make sure that's captured because, that's money in the, especially nowadays, newer appliances, they just feel like they're almost throwaway. The quality is not what it used to be. We have more problems with new appliances, than one would think.
I agree with you. I've seen that too. My mom and my grandma, they used to have 20 and 25-year-old washers and they never broke. But on the other hand, if they say, okay, we build it to last 8 to 10 years and you can get a 5 to 7 year extended warranty, that window gets pretty short. I hear what you're saying. The other part I think that is also important is to look at what is actually the actual thing that gets installed, right? Like I know, for example, one thing, we lived in a place for a couple of years where when we bought it, we were already told that the water is pretty calcium heavy, let's put it that way, right? So, the lines and all the faucets and everything will basically start calcifying. So we were suggested, and I thought that makes sense, but it immediately triggered to me, would property management tell me that as an investor to get a water softener so that you don't really run into that issue, even though, yes, it costs maybe $1,000 or $1,500 one time. And you can, if you do one with salt, you might have to pay a little bit for the salt, but it's for everybody's benefit, right? It pays for itself if you think about how much it would cost to rip out lines and replace faucets and all that kind of stuff. So those kind of things, I'm kind of curious. And, you can probably tell we've been thinking about this for quite a while because our clients obviously come back and say, hey, you told me this is a well-performing property and now property management has like this thing 3 months ago and 9 months ago I had this and now I have this new thing. That's 3 times already that something is wrong on what I perceive to be just recently renovated.
Yeah, I do think, especially on properties that are recently renovated, there is always kind of this ramp up initially, especially with new tenants moving in, right? Typically, when you've got a property that just gets renovated and then you've got new tenants moving in, you've got appliances that haven't been through cycles yet. You've got plumbing fittings, right, that potentially weren't as tight as you thought they were going to be. Pipes have been sitting cold during construction, start to heat up. So there's initial leaks and things. And then a tenant who's coming on board who has their own preferences and ideas of what they think should be done. There is absolutely a ramp up of work that, oddball things that tend to pop up on a new renovation property.
Yeah, absolutely. Yeah, that's actually something that I always advise, and I look for this myself when we buy a renovated property to get the seller. Maybe we like to work with turnkey providers to get the seller to give us a 1-year warranty, right? More not in the sense of every little nitty gritty piece, but just to say, okay, you renovated it, you should be proud enough to say, okay, I cover for the renovation for a year or 9 months or something like that. And that has actually worked out pretty well, exactly for the reason that you just gave. They are proud about it, but they also say, you only really see it when it's actually starting to be used.
Yeah.
And that's where this question came in earlier for me to ask, how big should you be? Because the ones that actually do that, not only are they turnkey providers with their internal property management, but they also have reached a size where they're not just the administrative staff, but they have basically a warehouse and they have a few people working for them that can work on both sides. They can be part of the renovation crew, or if there isn't anything being renovated and getting ready for market right now, they can also help out on anything that is kind of this first, I don't know what you would say, but I'd say probably 6 months of initial, when the initial occupancy happens, where you can assume that there might be something that needs to be tackled.
Yeah, I would imagine, just to kind of circle the loop on your the warranty question, I would imagine, just in the construction industry in general, I worked for a company that does massive, retirement community developments, almost 30,000 residents across the country. In general, that 1-year warranty is the industry standard. The vast majority of your problems are going to pop up in that first year.
Yeah, exactly.
And then it just drops off drastically, right? Then you'll have your normal weird, quirky things based on the way things are being used. But that initial appliances that are going to fail, if they're going to fail, they're going to fail pretty quick. Leaks, if they're going to happen, they're going to happen pretty quick. So yeah, that 1 year, I think, probably captures, it's never going to be perfect, right? The ideal would be to have a lifetime warranty on everything. But I think that 1 year is probably cover you for 85% of the issues you're going to have.
Yeah. And that's why I'm saying, that's good for the purchase moment. And then if you can get those who renovate, and like I said, I haven't been able yet, but I'm still hoping that one day I find somebody who renovates properties and is willing in the process just to have somebody who keeps track of those warranty documents, put them in a binder and buy them those extra $20 here and $5 there and $15 there, just so that everything is covered, especially in a turnkey environment where you renovate it, you sell it, and you manage it. It would make sense. But back to civil. So do I have to pay 20% management fee if I want to get this premium service, or how does that look?
It's 50%.
50. Okay. Yeah. That makes actually more sense.
Yeah. No, it varies. Like I said, we manage a very diverse portfolio. So we're doing a lot of commercial, we do residential, we do multifamily, we do some single family properties where it's an owner who has a portfolio, right? And so we evaluate everything on a case by case basis. In general, our fees are very standard with the industry. If we're going to bring on just one single family home with someone who owns just the one property, it's going to be, your typical 10%, gross rent. As the number of properties go up, or if it's a commercial multi-unit property, that fee percentage drops off just because there's usually a higher revenue base from a rent standpoint, and, commercial management in general starts to taper off. So we really evaluate each owner and the portfolio they're bringing separately and come to something that's going to work well for both of us.
Yeah, and I think most investors would be okay with that because, you're basically trading that to really have it as passive as possible, right? So when you say just give us your keys, there is basically this issue of I don't want to really have to deal with the tenants. Is that the biggest problem you're dealing with, or how would you describe what the biggest thing is that you guys are basically taking care of?
Well, I think it's different for every owner. As a business, right, your goal is to solve problems for your customer. So just as an example, we just brought on within the past 2 weeks a property owner who lives in North Carolina. He's got a single family townhome right in Catonsville, and they're not in town. The property's vacant and they want to hold on to it as a long-term asset, but they're not physically present. Right. And so we literally showed up, took a look at the vacant property, took photos of the property, things that we would recommend them updating, prior to getting a renter in. They were on board with that. So we actually managed and oversaw the renovation of the property. You were talking finishes, right? Paint, new vinyl plank flooring, just like a total refresh of the property, landscaping out front, doing a final clean. And we've just been communicating back and forth with them about the scope that the contractors are doing, providing, photos. We're going to be wrapping up that work tomorrow, and we're going to be putting it on the market to rent on Monday. And I've already had folks reaching out about it. In this case, they physically couldn't be there. And so the problem they had is they have this asset that they've owned for, 12, 15 years, and they're not physically around to be able to do what they need to get the thing rented again. And so we were able to help solve that problem for them. And so in that case, the keys were in the lockbox, but literally I've never met the owner. We took the keys and we're handling the lid and rental inspections. We've got, the thing is going to turn out really nice, and we'll be managing it, and they literally will have never even met us. So in that case,
that would actually be quite similar or typical for any of the clients that we're working with, because oftentimes, besides international anyway, but we also have a lot of domestic clients who live, like I said, in more expensive areas, or they chose to live somewhere far away from where they find interesting investment deals. Which kind of begs the question, you said you're kind of 10 minutes away from Baltimore and Baltimore Airport. What would you say kind of like the area is that you guys are covering with the Vills, so that if somebody has property or finds and sees a property that looks good, but rather wants to have somebody like your organization manage it, what would be kind of like the geographic circle, so to speak, where you would say, if you have anything there, then get in touch with Jesse and hand him the keys?
Yeah. So we serve pretty much the entire central Maryland area. So Baltimore City, Baltimore County, Anne Arundel County, all of the counties surrounding kind of the Baltimore metro area. So yeah, anything in central Maryland, we just don't want to take on anything that we're not going to be able to do a really great job with. We want it to be win-win.
That's why I wanted to ask,
if
somebody says, okay, I have a property in Boston or I have a property in DC, it's probably too far away, right?
At this point, not something we would be able to do an excellent job with. So we want to focus on markets that we can serve really well.
Okay, and I think that's a perfectly good approach. And obviously there are plenty of people and plenty of properties within that market, right? So one last thing before we come to our typical last two questions that we always ask is, do you do or have anything, if somebody were to say, I really like Jesse's approach, but it really only works when there is a property, do you do any kind of referrals if somebody says, I'm looking for a well-performing property to purchase and then have Jesse's outfit civil manage it? Do you do anything like that to say, okay, we run across different properties available that we would manage if an investor were to buy it?
Yeah, so we have a referral fee on our website. If you do have a property, or if you bring us a property and say, hey, this is a great one that you guys could manage, there is a referral fee.
Yeah, I meant it the other way around, that if let's take that example, right? If I say, hey, Jesse, I really like you, I like what you say, I like what you do on the quality aspect, I have not any idea in that area that you're servicing where the interesting investment properties are. Do you have any, right? Like, because our audience, like we just said, is probably similar to your couple that you just mentioned that lives somewhere else. You may or may never see them, but that doesn't mean that they might not want to work with you or would want to have property in the area.
Yeah.
So then the question becomes, okay, before I can get property management, I first have to get the property, right?
Mm-hmm. Got it. Yeah. And so we love talking about this stuff. That's why I'm on here today. Anytime if you have any questions about our market, we're obviously active investors. We manage a portfolio of ours and other people's properties. So we do have a very good feel on the pulse of the market in our area. And so, if that is something that anyone's interested in, just getting a handle on what the typical cap rates look like on the commercial side or what rents go for in our area. And you can obviously find current prices online, but happy to talk and share any input we can about the market here.
Yeah, that sounds good. I know from one of the property managers in my own portfolio that every once in a while, one of the owners actually approaches them and says, I found something else and I want to get rid of this, not because property management was bad, just because their priorities changed or whatever the reason might be. And then that property management company, even though they're not really a realtor or broker or anything like that, they always go out first to their community and say, hey, is anybody interested in this property? One of our owners wants to sell it. That's what I was kind of getting at.
Absolutely.
Okay.
Yeah, absolutely.
So that means, anybody who's listening to us today or watching us on YouTube, when it gets published on YouTube, if you're interested in the area around Baltimore and you want to see if Jesse can help you, through his existing stock or maybe some properties that they know but don't currently want to buy themselves, I think that would be worthwhile, right? Like that's, combining the two components of getting the property and then have management in place. So with that being said, I mentioned this before we started. I always ask 2 questions. We decided to switch them around, so you get the second one first today. If you had a time machine, Jesse, you could go forward, backward, anywhere you wanted. You know what you know, but I always say you can't change the time-space continuum. Can change the stock market or buy lottery tickets or stuff. But where would you go and why?
Yeah, so I'll keep it real estate related.
Okay.
If I could go back, I would like to go back 2+ years ago before all of this craziness with driving up pricing and the like. We've been looking for a place, small family place in this beach community down in South Carolina. And it is insane what has happened to pricing over the past 2 years. It's just out of this world. Like people buying properties in 2021 and then putting them back on the market for $300,000 more in 2022. Did no work on them. It would have been great to go back to 2 years and have been able to foresee just the crazy price appreciation that we were going to see and be able to get something at a little bit better of a price.
So you would have put a bid in then 2 years ago?
Yeah.
Okay, yeah, that's very cool. Nice idea. I think you're the first person who doesn't even want to go that far forward or backward, just a little bit. Okay, that actually begs a follow-up question. And you're obviously working in the industry. We are working in the industry. What's your prediction? How long do you think this relatively high interest rate environment can last?
Yeah, and this whole dynamic is what's been on my mind. This crazy run up in prices that we saw due obviously to money being cheap and there being this stimulated demand through COVID and the like, raised prices at such a crazy extent. And then obviously to combat the inflation, right, the government's only real recourse is interest rates.
Right.
So we've now got this major divide where property owners feel like their property is worth X, and the interest rates has reduced affordability so much for investors or property owners that you've got this kind of stalemate. And I don't know how long the interest rates, are going to remain where they are. What concerns me is kind of that stalemate of just the affordability right now. When are property owners going to realize that the prices that they were able to get a month, 6 month, a year ago is unrealistic given the new environment? That's what I see currently as being a major sticking point in the market as far as the length of time that we're going to continue the interest rates. I think everybody knows that 3.5-4% interest rate environment is great for the economy. However, with the inflationary pressures that got added due to all the factors, that's kind of the government's main recourse, right, for trying to slow things down. And the unfortunate side effect of that is that it impacts housing so significantly and affordability. Yeah,
I hear what you say. I agree with pretty much everything you said. My prediction is basically 2025, somewhere starting in 2025. And it's not even so much the market, because I really very strongly believe that the dynamic of much more demand for lack of having built enough stock in the last 10 years, it didn't just suddenly go away because interest rates increased. The thing that I believe has been created and continues to be created is that people sitting in properties that, like you said, how you even get started into investing was the notion or the interest to get into something bigger or different. And up until about 15 months ago, you could just literally say, okay, this is what I want to do for me, my growing family, whatever, you go and do it. And then it was just a matter of how much do you want to spend. Well, now those who would be in that situation, and let's say they sit in a $250,000 house, if they were to go and say, I want something bigger, even if I get it for the same price, it would be massively more expensive. Most of the time, it will be so much more expensive that they couldn't even make it, financially, so they stay. Right. So I see the situation is more like almost like freezing the market in a sense,
Exactly.
because all those people who have, especially owner occupied, they have below 3% mortgages right now. So when they look around and see that there's nothing that they can get for less than 6%, really, if you think about it, 6.5, in some cases even 7, depending on credit score, it just makes no sense to move, even if it's kind of cramped. Right. I'm not saying they're going to delay making the babies or stuff like that, but at least they might think, well, it just makes no sense. We don't get really a bigger place. That also, on the other hand, means that anybody who wanted to go from rent to buy is probably going to stuck, because it's so expensive for relatively small places and the few that you can even find, because you only find the ones where somebody has some crazy reason to have to leave their really affordable place. So that's what I mean by it feels to me that it's frozen. But the main trigger, I just for our audience want to reiterate that, kind of a little bit like a broken record. I believe the main reason is not the market, not the economy, not the stocks or anything like that. It's just that we're piling, and this discussion is going on right now again about the debt ceiling, right? The government has to pay interest on the debt, right? And the interest rate on the debt has increased sixfold in the last 15 months. It was almost 0 point something. And now it's around 3 point something, right? So even if you say it was 0.5, which it probably wasn't, and it's 3.5 now, that's 7 times more, right? It's not just 3% more, it's 7 times more, right? And so when we get to the point where the government looks at, okay, we have to pay $1 trillion or $1.5 trillion just in interest on the existing debt, that's when they will tell somebody high enough up, will say, Fed, the country can't afford it. It's not the individual, you and me in our houses or whatever. It's the country can't afford to pay $1.5–2 trillion just in interest. It's kind of like a business. If you don't even take in that much money that you would have to pay in interest. So interest rates have to come down. That's the reason why I think, yes, the process that you mentioned to try to catch inflation and bring it back and stuff is all good. But when the government is that much in debt overall, we are all basically on behalf of the government. Sooner or later, you can say, well, what do we do? Do we want low inflation or do we want to be solvent? And I think when that point is reached, I predict in 25, somewhere in 25 at the latest, the answer will be we have to stay solvent, even if it means higher inflation for a longer time. So, yeah. Now, the last question, that is normally the second to last question, is, Jesse, if you could meet anybody, present or maybe no longer around, who would it be and why?
So he's maybe gotten a little bit out there as he's gotten older, but I'm a big fan of Robert Kiyosaki, his book, Rich Dad, Poor Dad, which I'm sure a lot of your listeners have read and referenced on Bigger Pockets all the time, right? It was when I read that, it had put words to a lot of the things that I had seen and had been experiencing in my own life. And I loved it when I read it. And I so appreciate his views on financial literacy. I think it needs to be discussed so much more in our schools. I certainly learned very little about financial literacy growing up. And so I'm a big fan of Robert Kiyosaki and kind of that Rich Dad, Poor Dad mission on, just financial literacy. And so, I would probably choose him.
Yeah, that makes total sense. I mean, I'm a fan of his too. I think Rich Dad, Poor Dad is a very easily digestible story. Yeah. The real thing for me personally that made the biggest difference besides that story was the whole quadrant thing on, are you an employee or are you self-employed? Are you a business owner or are you working for a business owner? Just that so simple 4-quadrant realization, which quadrant are you in and what does that mean for you? And then if you combine that with the story, I totally agree that is a huge service. I mean, lately his statements are a little more extreme. I have to say, when you have this value lean, really heavy lean towards value with gold and real estate and stuff like that, there are some scenarios. I mean, we just briefly, slightly touched on it. Just imagine we were to get to a point where the rest of the world is just saying, you guys are so crazy. You have, let's say, $35 or $40 trillion in debt. We are not buying your bonds anymore. Yep. We don't believe in the dollar as the reserve currency anymore. I mean, there are a few scenarios where the dependence on others' goodwill. For example, even though I've never been there, I really have been wondering and asking myself, is this constant bashing of China and the Asian area as communist and this and that and so forth, while we at the same time have them hold number 2 or 3 volume of our treasury bonds. And I don't think their nature is to be retaliatory or stuff like that. But if you go to a friend and say, hey, I need to borrow money, will you be willing to borrow money? Give me money, I pay you interest. And then you're just shitting on him all the time. How long is that going to continue to work? So.
Yeah, I totally agree with you. It is an interesting dynamic. I mean, Robert Kiyosaki, he's big into when we left the gold standard, right? I mean, that first moment when we left, when there was not value tied to the currency and they could begin manipulating it, it set us on a trajectory that has served us well as a country. But at some point, yeah.
I agree with you. For me, the biggest thing is what people miss, honestly, and I'm typically very careful to make these generalizations, but I believe way too many people, regular people, especially in the United States, miss the fact that we are dependent as a country and as an economy. We are very dependent, even as a reserves currency, on the trust of others.
Mm-hmm.
And that trust, people, when they would take the time to look who are the biggest takers of US Treasury bonds, number 1 is Belgium, right? Which is kind of crazy to realize. And then number 2 is Japan, number 3 is China, and they used to be number 2. But it's a few of those countries, and we're playing this protectionist card lately quite heavily. Everywhere we see a boogeyman and we need to forbid their businesses and their technology and so forth and so forth. Well, if the whole system is built on trust, I'm afraid, and this is, I think, what somebody like Robert Kiyosaki, even though it sounds a little out there sometimes, I think he sees that too, that we're missing the fact that we so much depend on trust in our currency, in our bonds, in our system. And as we get more and more inward turned and fighting, blue versus red and stuff like that, and make believe that we don't depend on anybody and we don't need anybody, there is a point where people out there that have trusted us and have given us money might not do it anymore, right? And I think that is somewhat of a scary thought. And I think Kiyosaki is one of the people who says, don't wait until it happens, become aware and then try to protect yourself.
Yeah, by being a very loud and vocal voice, hopefully he's, I'm sure, just trying to get attention, right? But yeah.
Yeah, and I mean, when you get to a level that he has gotten to, you don't really have to care so much anymore what people think of you,
Right.
So that's, I think, a huge benefit. And when people ask me, what impresses you the most, I have to say oftentimes the fact that somebody else like Elon Musk seems to have come to the same conclusion. I say what I believe. Everybody left, right, center is kind of basically aggravated about it, but I don't need to care. I want to basically let the people know what I think, and they can like it, they can hate it. It doesn't really matter to me, but I still feel it's important that I voice my opinion. And I have the impression Kiyosaki is similar in that way.
Yeah. And I think it's something that's a lesson for all of us. I think we all really need to be authentic to ourselves. And maybe we're not at Elon Musk's monetary status, but I do think that's an important being authentic, because in this real estate journey in general, I mean, I'm sure you and your listeners know it's kind of countercultural. And you do find a lot of people that think investing in real estate is risky, and it's different than the 9-to-5 job that I learned and was preached to me, growing up, was you work hard, you go to school, you get the 9-to-5 job, and you work for that raise every year. Robert Kiyosaki, his book really teaches you to think a little different about money and learning how to make money for you versus trading your time and efforts for a paycheck, right?
Yeah, absolutely. I'm with you on that. The thing that I oftentimes say, and I always hope that resonates with people, is nobody, when they have decided what they want their profession to be, immediately within even the first 12 months becomes the CEO. Even if you say, I like whatever, fill in the blanks, and this is the kind of work I want to do, and I start in a company after college or whatever, or even after high school, to work in that profession. And even if you ultimately say, okay, I want to found a business, it's not going to be a multi-million-dollar profitable business within the first year, right? So for me to put that in perspective with working in real estate and building a real estate portfolio, that is also similarly a long game. And, the more you think about it, the more help you get, the more good partners you develop and so forth, you can shorten the time a little bit. But if someone comes to me and say, how long does it take so I can really stop exchanging time for money? I always say 8 to 12 years, realistically.
Yeah.
Right. And on the other hand, if you say, how long does it take for somebody who enters a career or profession to have a chance to become the CEO if they work as an employee? I don't know of anybody who didn't take at least 20 years.
Yeah.
And if you're a founder and you want to say, okay, I want to be really successful and have like a multi-million-dollar portfolio so I don't have to care anymore. Even Elon Musk took 20 years to get there.
Yeah.
Right? Like, so it's typically at least as long as a real estate portfolio or longer. Absolutely. And this is one of the things, one of the biggest critiques for me is that we have gotten into a world now and with social media and so forth, where everything is so instantaneous that when somebody says, this thing will make you free and independent in 8 years, and people say, are you kidding? I don't have that kind of time. But you have 30, 40 years to work in a job and you may never become the CEO, right? And so, but, we can only keep educating you with property management, myself with helping people to realize the benefits of real estate investing and value investing, and just keep doing it and reach the ones that it resonates with. Right?
Yeah. And it is a fun journey. I just love this stuff. I really do. And I've had a lot of time in my career. I've got a facilities engineering background. And so I've done multifamily development and the like for an employer. I love growing a portfolio. I love watching it grow and working with the tenants and working with the business owners who are in these properties. It's a great thing for the community. I enjoy it. There's a lot of rewarding above and beyond the financial freedom piece. It's a very rewarding industry to be in as well.
Yeah, I totally agree. And I have to say, people in real estate are just in general very nice people. So, whether you're investor or manager or you're lender or whatever, the people, even though sometimes the process might be annoying, but the people are for the most part, bigger pockets. Another good example.
Yeah, absolutely.
Now, Jesse, we've been talking for quite a while, maybe a little longer than we anticipated. If hundreds of people out there now want to hand you the keys, how do they get in touch with you?
Yeah, so you can find us, sevilleprops.com is our website. You can find us on Facebook. It's Seville Properties LLC. Like I said, even if you don't want to hand us the keys, if you just have questions, interested in knowing about our market, or even want us just to take a look at a deal that you're considering, like I said, we're investors. First and foremost, that's how we got started out. And we love talking about this stuff and happy to help in any way we can with anybody who's looking to get started in this journey, because it has definitely changed our lives and we're big proponents for it.
Yeah, thank you. And I want to thank you for being on the show. I think the way you're doing it is the right way to do it, with quality, with an investor mindset. And I hope more other property management organizations take you as an example. So we're really grateful that you came on, told us a little bit how you operate. And for anybody who has properties in the Baltimore area, I would say get in touch with Jesse.
Awesome. Thank you so much. It's been a pleasure. I so appreciate the time.
Yeah, absolutely. You're welcome. Thanks for listening, and I hope you enjoyed today's episode of the Ideal Investor Show. More info and the links we mentioned during the show are in the show notes, or you can go to our website at idealwealthgrower.com and sign up for the Apple Podcast link. And if you like to talk to me, sign up for a strategy call. Hopefully you want to share what you learned with your network and bring more people in. We are really eager to hear your comments. And until next time, be well, stay safe, and ciao.